希望大家都在股市里面继续发财。前几天 AMC 突然爆发，我做了这么一个交易，大家有空看看，稳赚不赔。无论 AMC 涨到1000块钱还是跌到0，都稳赚不赔，但是也赚不了多少。黄色背景是期权的行权价，可以看到股票跌到36块以下 Put 开始发挥作用，股票涨到49块以上卖的 Cover Call 开始亏钱，但是总体来说最少可以赚1700多，最多也只能赚5600多。有人问，既然有这么好的机会，为什么不多做几笔？我其实刮了很多单子，不同的价格，但是只成交了这么一笔。做成这笔交易需要3个对手方对股价和期权的走势的估计正好进入我的这个区间，其中肯定有一个人是要亏点。好了，献丑完毕，回到正题，这是方舟基金 ARKK 和标普指数的对比。显然最近一段时间木头姐姐亏了很多，但是方舟就是大船的意思，船小好掉头，方舟大船打的旗号是新科技，即使价值股、周期股大涨，它也不能全部买银行股、旅游股，所以有越来越多的人趁火打劫，落井下石，在做空 ARKK。 你看 ARKK 被 short sell 的股票达到了最高点，还有很多机构在抛售 ARKK。 别看那些绿色的买入的，那很有可能是 authorized participants， 因为必须做事不得不买，都是一些很大的投行。下面我们就跟着木头姐姐学习宏观微观动态吧。
So that's very interesting. These are 10 swing states for the Democrats. And it does seem like the tax talk is now more around corporate taxes, but not corporate taxes going up, tax rates going up from 21 to 28%. But now this minimum corporate tax at 15%. So every corporation who has not been paying taxes pays at least 15%. That seems to be the direction. That's very interesting. This means we may not see a capital gains tax rate increase, which would be phenomenal, and I do believe the market is starting to respond to this, nor a corporate tax rate increase, certainly not to 28%, maybe a few percentage points, but even that seems to be diminishing in probability. So I would say on the fiscal policy side of the equation, relative to our fears, certainly, about capital unfriendly policies, and certainly policies unfriendly to innovation, we are beginning to feel a lot better. Money growth rate, so M2's growth, peaked in February at 27% and is now down to 18% on a year-over-year basis. I haven't seen it below the 20% range in more than a year, I think, or roughly a year. So that's very interesting. Anyone worrying about inflation will have to take note of that. 18% is still a very rapid rate of growth, but the direction has changed unequivocally. The other thing that happened this week is the Fed said it was going to unwind some of the bond ETF and outright bond purchases that it made during the depths of the coronavirus crisis. Now, this is only $60 billion, which is nothing when M2 is at roughly $20 trillion and the monetary base close to $8 trillion. But nonetheless, it's a change in tone. Again, those worried about inflation have to take note. As you know, we've been talking about a V-shaped recovery for a long time. In fact, we started these calls during the depths of the coronavirus crisis, when I think many were worried about an outright depression. And we began to talk about a V-shaped recovery and started citing evidence from the government's reports to support that case. And of course, that is what has played out. Now we are in a little bit of a different camp. businesses were behind the curve even before the coronavirus. Businesses were not keeping up with consumer demand as it relates to inventories, and they were not increasing capital spending budgets. Why? There were two reasons. One, China-U.S. Saber rattling, the trade conflict, and the fear of supply chain issues. And two, maybe more important, was the inverted yield curve in 2019, which, according to the majority of economists out there, and according to post-World War II history, not pre-post-World War II, as we've gone through, would have suggested a recession within 6 to 9 months. And so they were poised for a recession. When the coronavirus crisis hit, businesses shut down. They were already behind the curve, and then they shut down, assuming demand was going to be dead for a while. And consumer saving rate shot up. I believe it got to 35% plus in April or May of last year. So the consumer had quite a big cushion, had never had such a big cushion, and the consumer started to spend. What did the consumer spend on? Goods, non-durable and durable goods. Goods make up actually less than a third of all consumer spending. Services make up the rest. So for the past year, the consumer, pre-vaccination especially, was focusing his or her spending on goods, just a third of a typical budget. And consumer spending rose as a share of total spending to more than 40%. As a result, we believe that consumers have actually been building inventories themselves at home. And so now that the consumer is filled up on durables and I'm sure non-durable goods as well, the spending towards services has begun. And we did see services consumption up 0.6% that month. So that's very interesting. That's in real terms as well. So here we have businesses scrambling, trying to build those inventories when the consumer is no longer focused on goods. That's a bit of an exaggeration, of course, just to make the point. They have been falling housing starts and existing home sales. Part of the reason for this is lumber prices. Lumber prices have more than tripled in the last year. In May, non-farm payrolls disappointed, and that was after a much more sluggish number, 218,000 the prior month. Average hourly earnings were greater than expected. The year-over-year now in productivity is more than 4%. Within the next year, we will be talking about labor shortages broadly. You can see already from the JOLTS report that we have hit a record of jobs unfilled. And that number is 8.1 million. Oil prices are pressing up towards $70 a barrel, and food prices are also flaring up. This is hurting consumer psychology. The University of Michigan's Consumer Sentiment Survey showed that consumers now expect 4.6% inflation during the next year. Pretty high rate. In the month of April, the CPI was up 0.8%. And is now up 4.2% on a year-over-year basis. The core, which excludes food and energy, it too is up 0.9%. So this is very broad-based, or it seems like it's broad-based. But if you look through the details in the CPI report, a lot of the inflation is coming from Transportation, hospitality and leisure, these areas of the economy are just starting to open up, and they have some pricing power. They need to recoup some of the losses from the last year, and that's what's happening. We do not believe this is going to be sustained. The Treasury bond yield has dropped from 1.75%. This is the 10-year Treasury bond. So to 1.55%. This reminds me a lot of 2006. The bond market got that one right as well. Energy prices soared from 2006, I think they were at $60, all the way to $140 in the spring of 2008. That's when the bond market began to see it. So we believe that the bond market is recognizing here that inflation is not a problem. We maintain our point of view that oil demand peaked in 2008. That's when oil prices hit roughly $140. And if you look at the pricing since then, it's been lower highs. I think the last high in 2018 was at $77. So we would be surprised to see it go beyond $77 or even up to $77, especially if we're right that demand destruction is underway. When we get into a recovery, the early stages of a recovery are when the cyclicals see a burst in revenues and earnings. And they give more growth-oriented and innovation-oriented stocks a run for their money. These growth rates are competitive. They're not sustainable, but at least they're competitive in the short term. And very much of the market is short-term oriented. I remember a strategist at Merrill Lynch in the 80s, Stan Salvikson, did one very simple thing. He calculated the percent of consumption that baby boomers would account for in the 80s, and it looked like it was going to go up through the 80s and the 90s. And he concluded that, therefore, that this young workforce, as it evolved and gained more wealth, would be very good for stocks and would probably be it wouldn't be as beneficial for bonds. Well, Tom has done a similar study and has concluded, based on demographics, that the market won't peak until the number of millennials peak in 2038. And he believes that the equity markets should enjoy a 20% compound annual rate of return through 2028, so the next 7 years, lucky 7 years. Millennials will account for more than 50% of spending during this period. From 2018 to 2028, they will account for 78% of children born, 44% of auto sales, and 40% of home sales. We think auto sales are going to come down. We think they peaked in 2019. 3 areas where we believe millennials will spend, and I believe Fundstrat would agree with this, certainly stocks, housing, but of course this demographic is very interested in crypto as well. Dogecoin is amusing. Our analyst Yassin El-Mandra is going to be writing up some of his thoughts about why it will not become the reserve currency of the crypto asset ecosystem. Our confidence in Bitcoin has not diminished at all. Our confidence in looking at the Turkish lira in some of the emerging markets currencies is diminishing. And I think that will be continue to be a very fertile area of growth, meaning the emerging markets, individuals diversifying into crypto assets. Inflation in other countries, meaning emerging markets currencies especially, in unstable regimes especially, could become more of a problem.
Cathy Wood 对通缩的阐述，这次视频就不说了，因为前几次视频已经重复了3-4次，大家可以参照左边的他的 Twitter 的总结。祝大家继续发财！